Hey guys, so welcome back to the channel. Today I have a new trading strategy which I'm going to backtest for you over 100 trades. I will first tell you about the indicators we're going to be using, show you a few examples, and then perform the 100 trade backtest. So this strategy involves only one trading indicator, and it's the famous SuperTrend indicator. So guys, if you want to support this channel and receive exclusive access to all the strategies we've backtested so far on this channel, please check out our Patrons page. We will also have a Discord live chat, which you can use to ask any questions to the community. The first 30 people joining the middle tier will automatically have full access to the top tier at no extra cost, allowing you to send a strategy for me to backtest. I will create a video similar to the one you're watching and present everyone with the results. So please consider having a look at the first link in the description, and I hope to see many of you on the Discord community. So a trend tracking indicator akin to moving averages is a super trend. It's plotted against price, and its positioning in relation to price makes it easy to identify the present trend. Only two parameters, the period and multiplier, are used to produce this very basic indicator. So the default values for the average true range and its multiplier, respectively, when building the super trend indicator are 10 and 3. The average true range, also known as the ATR, which is used by the super trend indicator to calculate its value and signal. The average true range, also known as the ATR, is used by the SuperTrend indicator to calculate its value and signal the level of price volatility. So this backtest is based on the daily time frame on euro dollar. So here's the strategy. We go long when the price breaks the last red SuperTrend level, and we go short when the price breaks the last green super trend level. We place the stop loss at the previous day's open. We don't have a maximum number of trades that we can have open at any given time. We are going to have a variable risk to reward ratio with a trailing stop loss, and which leads to the final rule, which is when the open profit reaches 1R, we move the stop loss by 1R. So let's get on the charts now so I can show you a few examples, and then we'll dive straight into the 100 trade backtest. All right, so here we are on the charts, guys. Euro dollar on the daily time frame. We're going to go ahead and add the super trend indicator. So it is, it's this one. We're going to keep the default input, the default value. So it's the length of the ATR is 10, and we've got a factor of 3. Feel free to change the colors. I'm going to leave it for now. So the strategy is we go long when the price breaks the last red level. So we would go long after this candle, and we go short when the price breaks the last green level. We would go short right here. You place the stop loss at basically the day before's open price. So let me show you a few examples, and then we'll go straight into the backtest. All right, so here are a couple of examples. So the price breaks the last green level to the downside. We go short after this candle. We place the stop loss at the high of the previous candle, which is at this level, and then we ride the wave. So the open profit was at a maximum of 2.78. So that means that we would have moved our stop loss as far as 1-to-1 risk to reward ratio. So that means that you would have been stopped out here or a 1R profit. And then similarly here, the price broke above the last red level. To the upside, we placed the stop loss at the previous day's low, and the open profit reached a maximum of 2.29R. So we would have moved the maximum of 1-to-1 risk to reward ratio. Then here, similarly, you would have gone short. This would have been a loss. And here, broke to the upside. This would have been a pretty nice trade. It did 5.32 Rs. So you would have made 1 to 4 Rs. So let's go ahead, do the back test, see how this trade performs over the years. And I'll see you for the results. All right, guys, so here are the results on euro dollar. We had a maximum drawdown of 51%. We were risking 5% per trade with a variable risk to reward ratio with a trailing stop loss. We had 31 wins, 57 losses, and 13 trades that ended up in break even. We had a maximum of 3 wins in a row and a maximum of 7 losses in a row. So that gives a win rate of 35%. So overall, the net profit over those 20 years was 2.1%. So obviously, if you would have started with $10,000, you would have ended up with a small $10,215. So this strategy is not great on the daily time frame, especially over the long term. I think we were missing a lot of big waves just because our stop loss was way too aggressive. So I think it would work much better on a lower time frame. And, you know, if we placed the stop loss at the last swing, for example, or we could use a zigzag indicator to automate the placing the stop loss. So let me know what you guys think. I think it's really interesting to see and backtest strategies that are not profitable and understand why they're not profitable. Sometimes, you know, it just keeps you grounded and shows you what not to do. And what to do in different time frames. So let me know what you guys think in the comments, and I'll see you in the next video.